So let's talk about the 5 golden rules of investing. Number 1 is you make money when you buy. So whether it be stocks when you buy low and then sell high, or real estate when you buy a below market value deal, fix it up, and then it's worth more. You can't just force your way into a deal and somehow think that you're going to be able to come out on the other side and somehow it be a good investment. So let's say everyone's hyping everything up, the stock's going up and up and up and up, and it has to come down eventually. Stocks don't just go straight up and never come back down. There's always some type of correction. Now, when that correction is, you can make some assumptions based on technical or fundamental analysis, but we're gonna go ahead and leave that aside for right now. We're just gonna look at the fact that if a stock's all the way at the top and it's at its 52-week high and it's been there and it's reaching new highs, yeah, it may be a good time to buy. Like, it may be a good investment, but it may also be okay to wait. Like, you don't know. Because you can't force your way into that stock thinking that, oh, I'm gonna buy at the very, very top, and then somehow it's just gonna keep going up and up and up and up forever, when really the money is made when you buy. So let's say you buy a stock at, when it's undervalued or it's getting beat down, like at the beginning of the pandemic, let's say it's $150. Now it potentially could be at, $250 or $300. But you won't be able to make the same return if you go ahead and buy that same stock today at $300, thinking that, in 6 months from now, it's gonna be at $450 or $500. The money is made in the buy. That's how smart investors make money. And at number 2, we have stop listening to the news. Everyone's been saying for the longest time, the housing market's gonna crash and the stock market's gonna crash. But let's be honest, if you had people stop saying, oh, the housing market's so hot, or, oh, the housing market's gonna crash, yada, yada, yada. So like, let's say you were gonna go buy a house and you were like considering it, but you're waiting for this supposed housing market crash that's gonna happen in 2021 with all the foreclosures and the evictions and everything like that. But let's say that housing market crash never comes. And you've waited and you've spent your time and, basically money that you could have made from investing just waiting for the market to crash. But you don't, because you're listening to the news or articles or blogs of people that are, financially savvy, which granted, they probably do have a decent handle on the market, but that's just like, it's their speculation. It's like me saying something and then you taking 100% of what I say as fact. So as long as you take the time to become well-versed in a specific topic, kind of have an outlook on, what's gonna happen, then you'll end up being okay. Remember, something like listening to the news and then waiting for the housing market to crash, the stock market to crash, you potentially are just losing money that you could have been investing between now and when the supposed crash is gonna happen. But if the crash never happens, then you're actually, like 6 or 8 months behind as you would have been before. So it's just something to think about. So number 3 in the golden rule of investing is don't get attached, especially when it comes to houses, because you can look at a house and be like, oh, it's really good, but like the numbers aren't amazing, or even if they are really, really good, let's just say you're just not ready, you're not in the mental space, you don't have the financial capability, or whatever that would be. It's very key to not get attached to a specific house, because houses are like buses. If you miss one, just wait 15 minutes. Another one will come by and pick you up. It's going to the exact same destination, which is, your financial independence and, being able to create generational wealth. So as long as you're sticking to your numbers, not getting attached to specific houses or to, specific investments, whether that be stocks or companies that you're investing in, it's just to kind of have more of that, meh attitudes about it. And that actually will help your investing, because then you can strictly just look at the numbers, and then it's not a feeling thing, it's just numbers. And when investments become just numbers to you, that's when you're able to make the most calculated decisions and make the best when it comes to the numbers, because you can look at how financially beneficial it's gonna be for you. So coming in at number 4, we have think long term, whether that be, just deciding to invest in the stock market or in a 401k. And when it comes to real estate, getting a fixed rate mortgage as opposed to a variable rate mortgage, whether that be, a 15-year fixed or a 30-year fixed, like whatever you're most comfortable with, you're still thinking long term. And that's really what matters, is that these investments aren't short term, get rich quick, I'm gonna make all my money now. As long as you're thinking long term, it'll end up working out. And that's the thing, is that like if you're looking at buying Tesla stock right now, you know, even if it goes down in the near future, which there's a chance it will because it's volatile, we all know it's volatile. But if you're thinking like, hey, what's Tesla gonna be worth in 10 years? Realistically, is it gonna be bankrupt in 10 years? No, probably not. So as you're thinking, you're like, oh, it's gonna be worth X amount in 10 years, but I'm buying it for this now, good investment.
And number 5 is an investment has to make you money, because if one investment isn't making you a return, not only have you not made money on that investment, but you're also losing out on the opportunity cost of what it potentially could have been to purchase a different investment. Hopefully this video is helpful. If you made it this far, it'd be great if you go and hit that like button down below. That'd really help me out with the YouTube algorithm. But anyways, I'll catch you next video.